Welcome back, viewers, for our next round of panel discussion. The topic for this discussion would be changing the game using AI, ML, and IoT in NBFCs. So, banking basics are still the same. Deployment of new age technologies such as with blockchain, artificial intelligence, machine learning, and IoT has only helped in transforming the end product for the consumers. So, will the new normal transform the traditional banking strategies? Let our panelists tell us. So our moderator for this session would be Mr. KC Mishra, Product Manager, Special Products, Elets Technomedia.
Mushkil.
Ms. Jyothiratha B, Chief Technology Officer, Godrej Housing Finance. Welcome, ma'am. Mr. Durga Prasad Swaminathan, Chief Information Officer, Cholamandalam Investment and Finance Company Limited. Welcome, sir. Mr. Balaji TK, Chief Information Officer, Orange Retail Finance Limited. Welcome, sir. Mr. Andy Sain, Chief Technology Officer, mPokket. Welcome, sir. Mr. Dominic Vijay Kumar, VP and Chief Technology Officer, Art Housing Finance India Limited. Welcome, sir. And Mr. Ankeet Bhat, Chief Strategy Officer, Mapmyindia. Welcome, sir. Now over to Mr. KC Mishra for moderating the session.
Thank you, Aman. Thank you for giving this opportunity to be a part of this interesting panel discussion. The 10th edition of Elets NBFC 100 Tech Summit has come a major milestone today, the 10th milestone. And 10th, 20th, 30th is considered to be a milestone. So over the course of last 9 years, and in fact this 10th year, this platform has emerged as a major knowledge exchange grouping to share and exchange ideas, innovations, knowledge which are shaping the world of finance and banking. This program is being broadcast live on a 3D virtual platform and is also being broadcast live on various social media platforms. The 10th edition of NBFC 100 Tech Summit started early in the day today, as mentioned by my colleague Aman Kothari. And the program is aiming to discuss what are the challenges, what are the opportunities, and how did the banking sector reinvent itself or respond itself to the emerging challenges and emerging situation during and in the post-COVID world. In fact, COVID has brought unprecedented tragedy, unprecedented challenges the entire humanity has witnessed over the course of past 100 years. Banking industry runs into hundreds of years of history, but even the banking industry was not left untouched by this massive tragedy and massive challenge. So how was the industry able to respond itself? How was the industry able to reconcile itself to the changing realities? How are the expectations of the common customer or the common man on the street? They are changing. Although, as my colleague Aman just mentioned, the topic is changing the game using technologies like AI, ML, and IoT. He also mentioned that the basic needs are same, and basic needs will always be the same as far as banking is concerned. The differentiator would be how can we change the delivery mechanism of banking products for the common man? Because with each passing day, with each passing year, his expectations are also changing. So how can we tune up, or how can we adapt ourselves leveraging technology to meet the changing expectations of the common man? And how can banking industry propel the overall economy in India and globally? And how can the emerging technologies play a game changer role? Because after all, COVID has brought a paradigm shift, not only in the banking, but the entire economies of the world. So technology, of course, would be the key enabler in this. And the topic is very, very relevant, changing the game using technologies like AI, ML, and IoT in NBFCs. So I'd be inviting the first panelist, Jyothiratha B, Chief Technology Officer, Godrej Housing Finance, to give her opening remarks on this very relevant topic of the changing of the game by use of technology. Jyothiratha.
Right. Thanks, Mishra. So, according to me, if I observe the finance industry trends, the slowly that AI and ML adoption is really increasing. So maybe 4 or 5 years back we started taking the baby steps, but now if you see the pandemic, the demands of the customers and even the employees, are a little bit, though actually the final demands are the same, but the way of execution has really changed. Today, customer does not want to meet the salespeople, and he does not want to do anything, and everything has to be digitized. And at the same time, even the employees are also are at risk. So they are also having a lot of problems in going to the field and actually meeting the customers and all. So these kind of technologies, where is it? It is AI or ML or whatever you name it, be it RPA or whatever. These are actually playing a very important role in actually speeding up the underwriting processes and ensuring the asset quality, and also giving a kind of a proper idea about the customer segmentation, so that you will target the right set of the customers, and you will be able to give the best offers to the customers and all. But having said that, what is happening is the earlier models, whatever we have modeled earlier pre-pandemic stage, all those things stop a little bit. I think there are some problems in those models, and we have to do the remolding of all these AI and ML algorithms, keeping the pandemic parameters in view. So yes, industry is moving towards, but a little bit of the disruption has come because of the pandemic, and people need to relook into their models and suit the current needs.
Thank you, Jyothiratha. Jyothiratha is Chief Technology Officer in Godrej Housing Finance. You rightly mentioned that these days the customer actually does not want to meet any salesperson, or at best he might want to meet, but with some advanced information he is expecting from the sales guy from the banking industry. But yes, one thing is true, which is true for me also. Going to the bank or going to the institution is the last resort the customer wants to adopt these days, because he wants to operate all the banking transactions from the comfort of his home, and this would only be possible if the banks are moving towards digital banking ecosystem. So I would now like to request Mr. Durga Prasad Swaminathan for his opening remarks. Durga Prasad Swaminathan is Chief Information Officer in Cholamandalam Investment and Finance Company. Durga Prasad. Durga Prasad is not there. I'm sorry. Balaji TK. Balaji TK. The role of
Hi.
technology in transforming the banking sector, changing the game.
Thank you. I take this opportunity to thank all the viewers, the Elets team, for organizing this 10th NBFC and the Tech Virtual Summit. A little bit about my company. Myself, TK Balaji, having 23 years of techno-function experience. My company, Orange Retail Finance, we are an young NBFC and a traditional digital NBFC company providing.
Balaji, could you be a little louder, please?
Sure, yeah. So we are having 1,800 employees and having like almost 90 plus branches in South India. So there are almost 1.5 lakh customers in this 6 years of operations covering 10,000 pin codes. So we predominantly operate in Tier 2, Tier 3, Tier 4 kind of segments. So that's our base. So we mostly depend on all these new age technologies from AI, ML, IoT, blockchain. So this kind of things like we extensively use it. So what we do is because the regulators have been stricter in the recent times, the cost of borrowing has increased, and the NBFCs are focusing on niche markets and personalized product and services. So NBFCs are more focused on developing the innovative products and catering to low-income urban customers in unorganized sectors. In such scenario, NBFCs are adopting this business and operational model powered by these technologies that seamlessly facilitate the design, launch, and implementation and execution of the tailor-made products. So investing in these new technologies and strategic partnership with incumbent financial institutions and fintechs allow the NBFCs to lower the cost when it comes to increasing the customer base, lowering the customer acquisition, servicing the existing customers, de-risking the portfolios, while trying to overcome the increasing formal credit penetration in the growing economy. So some of the things where we try to utilize this is emerging technologies or artificial intelligence. So we mostly use it for automated end-to-end credit management, robotic process automation, mostly for the paperless processing and real-time reconciliation, advanced analytics, use it for this 24/7 customer support, and for agility and scalability, and most of the API integrations for this integrated accounting engine, unified solutions, blockchain for this dynamic workflow management, and chatbot and NLP for this powerful rule engine. So these are some use cases we try to experiment ourselves. So when they keeps going, like I'll keep coming up, where do we use most of these technologies. Over to the other panelist.
Thank you, Balaji. I would now like to request Mr. Andy Sen, the Chief Technology Officer of mPokket, for his opening remarks. Andy Sen is there.
Hi, good afternoon.
Yeah.
Thank you, Mr. Mishra, for having me on this discussion, and good to meet all of you as well. I think let's just start off with the basics, right? I think Jyoti ma'am kind of raised a very important point in terms of the expectations of the user, right? The expectations of the customer that has changed over the last, I would say, year and a half, right? And mPokket, we are a lending NBFC, and we are primarily in the digital space, right? So from day one of our inception, we were app-based. Users could download our app, from the Google Play Store, upload your KYC documents, get certified, and get money based on your credit limit. So one would think that being digital was impervious to the kind of challenges that come in. But what has actually happened is, typically when we have, let's say, an operation or compliance underwriting happening on your backend, right, there would be some kind of a delay, usually from the time that a person, they have uploaded their KYC docs and, let's say, income proofs and so on, to the time that an agent would actually go check and come on. So typically that time could be anywhere, on a good day from 6-8 hours to could easily become 48 hours, like 2 days, right? And what has happened during the pandemic is the end user is like, no, we need our money sooner, right? I have done my KYC. Why are you not, why are you not giving me, why are you not lending me money? And and we see that the expectation is like, this is an app. I have done everything. Decide my credit limit and disburse the loan that I'm asking for. And that is where I think we turned on to having machine learning models. And what the machine learning models helps us to do, and because of the amount of scale that we typically have to deal with, right, it is able to filter out that most of our users who are typically what we call the good borrowers, and having low risk and having low underwriting risk, right? So they actually get approved on an ML model, and the certain segment which are not able to fulfill all the criteria, that kind of flows on to the manual verification process. So which was typically earlier a full manual verification has moved on to a certain percentage, and that grows as our model gets trained, and so that you can actually get approved for lending. And what this has done is now, as an end user, and for a majority of our end users, right, if you obviously fulfill the criteria, you get approved for lending, you get assigned a credit limit within minutes of uploading your documentation, right? And that is where I think ML has really helped, because now as a user, if you're okay, if you're not a high risk borrower, you get your credit limit assigned within minutes. And then you can actually, the loan that you requested can be disbursed within minutes. And it is very difficult to beat a benchmark like that. And it's only possible, when you are using advanced AI and ML techniques.
Yeah, thank you. A classic example, as you rightly mentioned, how beautifully you are able to leverage technology like machine learning for churning the data and for segregating the data, as you rightly mentioned. That customer is not wrong. If I'm a consumer and if I complied with all the requirements of the bank, then I'm expecting a day 2 or day 3 turnaround time of the service delivery. But the constraint at your end would be that you are having so sheer volume at your end that without the automatic verification process, which you have been able to do because of efficient leverage of the technology, machine learning, it would not have been possible for you. So a very beautiful example how you move from manual verification to automated verification with the help of technology. So now I would like to invite Dominic Vijay Kumar. Dominic Vijay Kumar is Vice President and Chief Technology Officer, Art Housing Finance India Limited, for his comments on this topic of the role of technology like AI and ML in changing the games of the rules of the game.
Thanks, Mr. Mishra, for inviting, and good afternoon, everyone. I represent Housing Finance. We are based out of Gurgaon. We operate on the western and the northern part of India. And our focus of business is more on the affordable segment, tier 3, tier 4 cities. Okay, just to give a small glimpse on the kind of the way we operate using technology, we work on both hybrid model, that is the manual process as well as automated process. Because the kind of customers we deal with is almost typical like your Ola drivers, tea stall owners, kirana shop owners. So their technology has got a limitations, but we try doing. So if I look at the hybrid model, what we are presently doing post and pre-COVID, like post. I mean, as Jyothiratha was also clearly saying, COVID has taught us many lessons: how to improve our technology, how to bring in things into picture. Okay, the major problem, if I had to say, what we are facing right now post COVID is more on the collection front. We have dispersed quite a huge amount in the market, but to recover those amounts, how are we going to do it? And we did a lot of what do you say, kind of manual. Benchmarking and distributor disperse the load. But today, post-COVID, after the job loss of the kind of customers we have, we are looking at ML is playing a very, very important role for us, especially when it comes to delinquency. How are we forecasting? Because we don't know the next if there is going to be a third wave or it's going to be things are going to be stabilized. So keeping in that mind, ML is giving me a very good ML plays a very, very important role for us, especially, and we are on the track of bringing in ML solution where it gives me the complete delinquency forecasting, okay, the kind of customers, and it is past customers what we had, present, and the new customers what we are going to do. And when it comes to artificial intelligence, yes, we already been using artificial intelligence, especially at the underwriting level, and ML is already played an important role for us. Maximum, we can say up to 50% of underwriting is done on the technology driven. Basically, up to sanction, I can say it's 100% driven. Even your CPC level, we are using AI, especially when it comes to quality check on the documentation what we receive from the customers. Okay, and otherwise, ML and the AI will play a major role for us, especially the kind of business we do in the kind of sector we operate on. Help us out in the delinquency part, NPAs. These are the things. More than the new business, I got to see like how best I can use this technology in getting my cutting down on my NPAs and cutting down on the delinquency and get the better business and see I recover the money first. That's it from my side.
Thank you, Mr. Dominic Vijay. Am I audible?
Yeah.
Yeah, my voice is echoing to myself. So you mentioned about how effectively you have been leveraging technologies like AI for underwriting, and you mentioned that 50% of underwriting in your organization is being done through AI. Similarly, you mentioned about machine learning, how it can be helpful in forecasting delinquencies and reducing the delinquencies in going future. So now I would like to request Mr. Ankeet Bhat. Ankeet Bhat is a Chief Strategy Officer in Mapmyindia for his opening remarks on this topic. The topic is changing the game, role of AI, ML, and IoT in NBFCs. Mr. Bhat.
Hi, Mishra ji. Thanks for the introduction and interesting thoughts and from everyone here. Maybe my perspective will be a little different, but obviously will be on the similar lines that the consumption of technology is just increasing incredibly. From a Mapmyindia perspective, we are basically India's largest mapping and geospatial technology company, and essentially a map is nothing but the representation of the physical world, right? Like, so when we at our businesses are combining what digital data is being generated, when you marry it with the physical world, right, the information of the physical world, that's when those insights start popping out. And that's where we've seen and that comes through, at least in our understanding. And as we have seen and implemented so many of these use cases across the financial industry, and we've seen the most amount of response and demand actually from the this industry and also insurance included. But essentially, very interesting use cases from verification where, if someone's getting digitally verified, then you'd want to know their address automatically through their phones, right? So you can pull GPS and be able to understand exactly what the address is. Also from, if you're sending people, there's so many field people, and how do you automate and how do you get live location, and how do you run that whole system? It's very complex, and essentially in this world of remote work, you're still trying to sit in one place and try to understand how many people on the field are doing and where they're going. So that location again becomes very critical to make sure that people are actually visiting customer locations. What are their reimbursements? All of that becomes like a fully, I would say, automated AI driven system. So that, and also from from analytics. So when you have a lot of this information, how do you marry it onto maps? See where competition is present. See where consumer density and affluence density is higher. How do you take decisions on how much what should be your interest rates in certain areas? How do you allocate leads basis branch or a field person availability immediately? So that is all location and proximity driven. So those are the use cases we've seen, and it's applicable, across the lending spectrum. We've seen that not only for branch and business expansion, but also for kind of understanding where the associated risks in the business are. So if you're seeing a certain pattern, then how do you create negative clusters, geospatial negative clusters, and use that as an underwriting decision making, a science. So when you get new requests from the same areas, you're aware that those were negative clusters. So those are all basically combining information with geospatial data and deriving science and answers for underwriting, collections, for onboarding, all of these different processes. So I think it's extremely interesting, and we'd hope to see. I think this is kind of getting democratized also. Many institutions are using it. So exciting times, I'd say.
Yeah, this is actually exciting time because banks and NBFCs, insurance, these are all multi-locational companies, and they are also distribution-centric companies. Huge distribution workforces out there on the field. Where are they going? What are they doing? What are they not doing? Whether the addresses are fake or addresses are genuine. So you just mentioned very exciting points. In fact, even as far as I'm concerned, I was not aware that we do have such technological solutions which can be used to map all these things at one place, like address verification, location verification, branch business expansion, and also most importantly, you mentioned about the concept of negative clusters. You can map all these clusters on the basis of their past businesses. So quite interesting. Thank you for that insight, Mr. Ankeet Bhat. My opening question for my fellow panelists, I would request Mr. Jyothiratha be Chief Technology Officer, Godrej Housing Finance. AI, ML, and RPA is becoming an essential part of the BFSI across the globe. How is the NBFC sector embracing it and getting benefited? Is the sector facing any budget-related challenges in the deployment? Although we did mention all these points in bits and pieces by all the speakers in their opening remarks, but Jyothiratha, I would now request you to elaborate on this concept of AI, ML, and RPA becoming essential part of the BFSI, and also the benefits of the technologies in detail.
Yeah. So I'll just explain how we have gone in this path. So we are the one of the very few organizations who launched their business during the pandemic times. So for us, digital was not a kind of an option actually. So we have done, including our onboarding of the employees to the onboarding of the customers and servicing of the customers, everything was to be digital. So without these technologies, I can't even imagine how it would have been actually. So right from the customer segmentation related scorecards, and also to determine whether the customer is giving the proper address, like Mr. Ankeet has mentioned, using the location intelligence in this kind of complete underwriting models and all. Everywhere this has been, these kind of technologies have played really very important role. So take an example of one customer in Delhi, and our employees are in Mumbai, and both are working from home. And how beautiful it is to disburse a loan to the employee without having to meet the customer physically. So that requires a lot of understanding of his address, his all other financial details, whether all those details are completely correct or not, and your powerful underwriting models would be required for this one. So without this this complete digitized data and all, it wouldn't have been possible at all. So now I have one slightly different view on the AI and ML. So AI and ML are good tools for giving the insights to the customer. These things will reduce, as far as possible, they reduce the subjectivity of the underwriter. So doing the complete underwriting not based on his previous experience, not based on his own thought process or whatever, but these models help him to take the proper decisioning and all. So that is where we are using these models. And we are, in fact, we are enhancing all our physical channels with this digital data. That is our approach. And I feel the complete automation using AI in doing the underwriting of, especially in housing finance, it may take some more time, but as industries are trying to move towards that, and now because of this pandemic, this digital adoption has really increased, and the complete digitized data is also slowly coming in place. And now with the new concepts, like new things are happening, the token type of networks are enabling all the NBFCs and also the banks to get more and more digitized data through the proper channels, so that you can do the automated underwriting. So that is from my side.
So you mean to say that you are seeing a limited scope of AI ML as far as your industry's underwriting is concerned?
What I'm saying is these are helping us to reduce the subjectivity, but just by closing your eyes, just because this model has given some result, it would be very difficult, because these are high ticket items. What I'm saying is underwriter need not have to really bank upon his previous experience and all, but because of this customer digitized data and using all these model is predicting, and model is giving you certain kind of tendency, and whether the customer propensity and customer intention to pay, and early warning signals. Based on all these data driven inputs, he will be able to take the decision on the underwriting, and he will be able to move forward. So these are, as far as concerned, these are for the big ticket items, because there's a huge risk involved. And as I said, every AI and ML model will have some kind of this, the industry trends and the current market conditions, everything will have an impact on these models. So how you are really getting into the model remodeling, and what kind of parameter, are you missing any parameter? So pandemic was a new parameter actually. So whether you're considering all those parameters in the model and all, it matters a lot for us to give those insights. So we should be very careful on these models, and it has to enhance every organization is moving towards a kind of data-driven decisioning, right? So this is it is better than last year, and the last year was better than previous year. So like that, the slowly industry is moving towards these things, but you have to keep an eye on the industry parameters. Otherwise, you will end up in getting the wrong output. That is the point I'm mentioning. It's not that people are not adopting. So all the channels of the physical channels and all those things, with this data-driven decisioning, it becomes very easy for underwriter or the salesperson to give a product to the customer, or underwrite a product properly for a customer. So what happens is, because of that, you don't have to have a 15-year experienced person in a particular role, because he has to really work on the data, and he has to take the decision. So that kind of the industry is slowly moving towards those kind of models.
Okay, understood. So Dominic, Vijay was mentioning that 50% of underwriting in his organization is automated through AI. So do we foresee 100%? Although 100% will be almost impossible, as rightly mentioned by Jyothiratha. Dominic?
Mr. Mishra, we cannot say it is 100%. We can't do it, because
Yes,
as Jyoti was saying, that we are in a kind of business, the housing finance business, is a high ticket size, a bigger ticket size, and the tenure with the customer is in a longer term, and we are bounded to certain regulatory norms. Okay, 100% digitization cannot be done, or we cannot use. Yes, we can use AI, ML to support our business at the back office level, like underwriting, giving a clarity on the underwriting, so that and the sales team designing a particular product for the customer, for a particular segment of customers. Again, AI ML will play maximum amount of role for the different kind of customers, in a salary, in salary with banking, in without salary, with their cash payment. So there are multiple kind of customers available to us in the kind of business we are into. ML can play a role for us, giving us the dashboards, analytics, forecasting, and kind of delinquency reports, helping us to understand how the market is going to be, what kind of, it'll also help the underwriter to, during the disbursement process. Like if somebody is asking for an X value of loan, you cannot give that X value of loan. There is a kind of scorecard which comes into picture. That's where ML comes into picture. ML plays, it collects all the data which is there. On that basis, it comes out with the score. Then on that basis, we can disburse the loan. Again, that also subjected to the kind of regulatory clearance given for it, like your banking, your KYCs, and all that. So ML I can't say, I mean, it's just too early to say ML will take over 100%. Yes, gradually going forward, housing finance will get converted into a more of a digital move post-COVID. But yes, as of now, it is up to 50% we have done successfully, and we have been doing it. Like I can say, one is disbursement part on ML, and when you look at my sanction part, it is 100% digitized. Right from the customer acquisition up to the sanction, it is 100%. Where I use maximum amount of AIs at the CPC level, and even at the sanction level, I use my AI there. But underwriting, we are still at more of a maturing stage. It may take some more time for us to get onto it. And in housing finance, as Jyoti was saying, the ticket size are big, and we've got to be very, very careful. We tend to get into NPA fast. When there is an NPA, there's an impact by the on the company performance and from the regulator also. You've got to look at all the factors. Technology plays a role, but at the same time, we have to see that how good we are in sync with the regulator's requirement.
So, the best part would be that the data can be generated using the technology, and finally there would be some element of human subjectivity also involved, because at times, as rightly mentioned by you, the ticket size is so big that we cannot ignore human intervention. My next question for Mr. Ankeet Bhat. You did mention about location-based intelligence. So, Ankeet Bhatji, how are the NBFCs using the location-based intelligence in India? What is the scale of the deployment as of now? And what are the future prospects of AI ML as far as location-based intelligence is concerned?
Thanks, Mishra ji. What we have seen in the NBFC space, actually, the utilization, at least from the largest NBFCs, have been very high. So some of the use cases that I mentioned on negative area and kind of finding those patterns of locational patterns and clusters where there is delinquency or that kind of behavior. That adoption was very quick, and that actually is spreading across many wherever the volumes are very high, and they are mainly consumer related, and that is helping the underwriting process. That definitely is a huge use case that has grown. And that's actually not only happening now, it was happening from last 2 to 3 years. So it's been growing very, very fast. The other ones around kind of automating the field force, I think that we've seen not only in this industry, but all across, as COVID came in, everyone wanted to kind of see location. So that I think is becoming omnipresent, whether it is, in the finance domain or in the consumer domain, finding the location of a field person, kind of knowing that's kind of a no-brainer right now. And those tools are also very easy to integrate. The biggest challenges what are being solved right now is how can organizations easily integrate these, because they're not easy tools to finally get like maximum utility out of, and to get highest accuracy out of, because if there is a phone, the phone location is inaccurate sometimes. So how do you solve for all this at scale, right? When you have like 5,000, 10,000 people and you're getting inaccurate locations, how do you what does solving for accuracy mean? So that's kind of some of the questions that now the ecosystem is moving towards. That how much of the location should I take? Is it accurate or not accurate? Can you tell me that, or if it has to be accurate, what should the person do on the field, or how can I make it act? So those are that's where the questions are moving towards. So that's kind of interesting. Also from a machine learning AI perspective, I mean, a lot of everyone has phones, almost 600 million smartphones in India now. And the very interesting bit there is to use as much phone sensors as possible. So the camera, the video, so that's for video KYC, I think has become a huge trend. But also from a verification perspective, someone's going to verify, can they use the camera? And can you apply a lot of learning and analysis on the images itself that are coming in? So those are also very interesting use cases that are popping up. Um, and from asset recovery, which you're seeing mostly in asset financing and from motor financing, that's where basically, if a lender essentially is giving a little bit of an unsecured loan to, and you obviously want to do that when you want to really increase sales. You're attaching basically these small IoT devices in the asset. So in case if if the person who's paying the loan defaults, you can recover the asset very easily, and it is almost like a consent with the person itself. And we're seeing this phenomena very intense actually across, as the loan base is increasing. So if there are, like, many people who are getting assets to use for their own purposes, there are IoT devices that are being embedded so that the asset can be recovered, and therefore that obviously reduces the NPA on that completely. So it's becoming a very interesting tool, but obviously there's a consent mechanism for the person to agree for it. So those are some of the interesting use cases that we're coming across. Yeah.
Thank you, Mr. Bhat. I hope you mentioned about the easy integration being one of the key challenges, and I hope with times to come that challenge is also going to be addressed as far as Mapmyindia is concerned or their customers are concerned. Balaji, TK, asset quality is one of the major issues. Do you think that these technologies, emerging technologies like machine learning and artificial intelligence, they can help in improving the quality of the assets?
Absolutely, absolutely. Uh, we started with the two-wheeler finance. We predominantly been doing two-wheeler for the past 6 years. So for me, the ticket size is small, but the customer base is too big. Okay, that's first point. Then after this, we started emerging ourselves to the personal loan, and we also emerged ourselves to the loan against property. So we have a three product. In this predominantly it's a two-wheeler. So asset quality is really like there's a lot of decisions that are happening in the asset quality. For example, what we do is when we started, we took almost 3 days, 4 days, 5 days to give a decision. So then what happened? We started bringing in lot many algorithms to the system, lot many AI practice into the system. Since we started building huge set of data, we started working on machine learning. Then we went into deep learning. So now what we can able to do is we can able to disperse a loan, a quality customer, okay, within 20 minutes at the max. At the max, we can able to disperse end to end. I can able to disperse money to the dealer within 20 minutes, which initially took a 2 weeks period, and then the 6 years journey, we just got it there. The reason began here is most of my customer, almost 70% of my customers are first time borrower. They don't have a credit history at all. First time they're coming to me, I am making them to go and borrow some other place when the credit is completely over. Okay, so I'm also empowering them. So they come to me as a fresh customer. They want to understand about the banking. We teach them. I capture the entire KYC information. I capture the customer geo tagging everything. Once I capture the address with certain tools, I can able to take a complete map, lat and long everything, which dealer, what is it. So it's a complete automated system. I check this bank account immediately. So if everything is getting validated immediately, I also check his customer profiling. We do have certain algorithms for us. So all these are kind of a lot of AI is built into the system. It's all completely homegrown solution. We built it ourselves. So what we do is within few minutes, we can able to give him the sanction. Yes, in principle it is approved. Please go and take the bike. So customer can go and take the bike within few minutes of the time. So what we are seeing is ironically, okay, we also taken a set of data, let it certain things done by manual underwriting. Okay, we also want to do kind of a delta how the system is progressing. So wherever manual underwriting decisions are happening, okay, this automated decision engine is doing much better in terms of collection. Okay, so we also did a lot of R&D ourselves. Okay, so instead of we told fine, you guys do it manual. You want to see then the automated engine. So if you see, ironically, this automated engine, because it's all we are programming it what need to be done. Sometimes the decision also gets differ based on manual. So once it's automated, it clearly segregates what it is required. It stops there or it allows it. Okay, so we have seen our collection is completely improved in this automated engine. and we use a lot of collection algorithms for us. We do have 1,800 employee. Most of them are field force sitting in all the rural areas, try to they go and collect the cash customers. I got three sets of customer. Cash customer, they don't have a banking habit. Then there's a customer who's digitally, they know how to do the banking, everything. They can able to use some kind of like UPI mechanism through GPay or Paytm or anything. They can able to do the transfer. And there's the Nash customers, the Nash customers. So that's a three sets of customer. We completely take down all the data. We put them, plot them in my map. If I, like for example, if you order in or Ola, Uber, if you can able to see where the cars are there. So I can put a map and see where my 1,010 employees are there, which customer they are going today. What is that? I can able to fence them accordingly. If any customer call comes, if a customer call comes, I am having money, please come and collect. I can exactly find out from the customer house which agent is very, very near. I can just immediately redirect them. So we do a lot of algorithms even based on this map algorithms or even based on this AML algorithms. So decision making is one thing. After the decision making, we also use a complete form of collection. We can able to identify the customer habit, whether he'll be continuing paying or there could be any kind of a challenging. So immediately call center team is intimated, he can able to go and touch base with the customer. So that's a complete algorithm for it. So what we also done is, apart from this asset quality, everything, we have gone and took a kind of a no code platform. So that means we have three systems. One is a core engine, which has the loan management, loan origination, loan collection, everything. I call it as a core, which is I need to run for my customer entry, which consists of loan origination, loan management, loan collection. That is one thing core. Then I have a wrap-up technology. We call it as a kind of a me tool technology, where all others are there. And we also taken a kind of a no-code platform. We empowered our entire team to start building their own flows. Like they not want to depend on the technology team for every scenarios, for every flows. So we also given a no-code platform. We trained all our functionalities to start using the no-code platform. So these three technologies are there with us right now. But extensively, we keep using all these AI learnings, ML learnings, deep learnings into that. And we also now experimenting with a lot of like ledgers. We are experimenting with the kind of crypto ledgers. We are trying to experiment. We need to see. Now from this 20 minutes, we are trying to disperse the loan within 2 minutes. So that's our idea completely. We don't want to see the customer physically. We are making a digital platform where the EKYC is getting ready. The complete agreement will be done digitally. Only thing, customer need to visit and take the bike, or we are also going and touch base with the dealers and saying we can do the door delivery of the bikes to the customer. So that is also we are doing it right now. So we're experimenting this entire whole project. This should be up and live running in the next 2 months time. So that's our dream project right now. We are also working on it.
Wow, this is truly exciting. Dispersal of the products from 2 weeks time, once upon a time, to 20 minutes these times, and going forward, you are aiming for the service delivery in a record 2 minutes. This is truly exciting, and this all has been possible or would be possible through, of course, deployment of the emerging technologies. But one question, and also you mentioned that most of the customers are first-time customers, so that really brings the issue of safety and security different. So how are we addressing this issue of safety and security of data, which can pose a major risk factor? And the same, Chief Technology Officer of mPokket, what are your views on it?
Okay, Mishra, so that's
Safety
a very,
and
very
security.
interesting question, right? And I think this is something that most of us would be aware of, right? I mean, recently, if you've seen, there has been news of alleged leaks of customer data across different organizations of different sizes, right? The first thing you have to understand is the first part that comes in for your safety and security is what we call secure development practices, right? It has to start with your technology team, with your engineering team, software engineering, where they practice secure development, in a manner which does not leave, or at least does not purport to leave any kind of openings around, right? So it's obviously multi-layered. So you start off, your foundation has to be secure development practice, right? Then you put in your next layer of protection, which is typically you have secure environments where you get it typically audited and tested by third-party verified experts who are typically whose business revolve around infosec. Because while we may be able to, as an NBFC, we may have a rock star engineering and tech team. Infosec is a very, very specialized field, right? And where it absolutely does not hurt to depend on external specialist infosec vendors, right? So you kind of obviously utilize them to make sure your environments are okay, right? And then obviously is the third one, which is also pretty common among technology companies, is you actually run something we call the bug bounty program. So where you actually reach out to freelancer, infosec specialists and say, okay, why don't you sign up on our platform as a user, as a regular user, and then try to break into our platform. So we give you permission to try and break into our platform, and if you're able to find any bugs that allow you to do so, so they obviously get some sort of reward. So using these multiple layers, it actually kind of gives you at least some, it gives you a reasonable amount of confidence that the data of your customers have been secured, right? So this is one part which we looked at, and this part always gets a lot of attention because it's an open, what we call, it's an open vector, and in terms of like anyone can kind of come and kind of attack your infrastructure. One part which typically does get overlooked is the internal side. We usually assume that threat vectors are external, but sometimes they're internal also, right? And much as we would like to pretend it does not happen, we know that typically when an organization grows in scale, so especially when you start reaching, let's say, 1,000+ internal employees, and these are specifically employees and agents who are dealing with customer data, right? There is always a small risk of data being siphoned off from an internal thing, right? So not only are you then have to think about from an external but internal perspective also, you put in strict measures, especially recently with work from home becoming a norm, right? You don't have open access. You allow access strictly via VPN. You do not, you kind of have to restrict access to the outside internet while you're on VPN, right? You track like how many, let's say, how many documents have your agents download, how many customers are they actually reviewing, and if required, even you have limits. Like typically, let's say if an agent can process about 150 to 200 customers, you keep it at that point, right? And you again use, interestingly, you will use statistical methods to kind of see if there is any kind of agent behavior which is deviating from the norm, right? Because as you scale, 1,000, 2,000, 3,000, as I think one of the gentlemen was saying, without using some sort of statistical models, regression models, it becomes very difficult to spot some of these trends. And so once you have this, right, both from an external and internal perspective, you can be reasonably certain. Like nothing is 100% sure. As my role over here, I always dread, like, one day morning I'm going to wake up and some Frenchman will tweet that, hey, look, we got all this data off from this. So you don't want to see that, but you can take steps like this to make sure that the likelihood is reduced a lot.
Thank you, Andy. You have hit on a very relevant point, and as you rightly mentioned also, sometimes we tend to either ignore it or not to acknowledge it, the threat of the internal threat, the threat from within. And as you rightly mentioned, when the companies scale up and their employee size exceeds 1,000+ employees, and being most of the agents, distributors, work employees, all having access to the customer data, and there have been instances where this data has actually got leaked from internal sources only. N number of examples can be cited, and you had mentioned a very relevant point, and we do hope that technology comes into the fore as far as plugging this loophole also is concerned. So I can see a question on the screen from one of the audience. Is technology helping you in employee management, also apart from the customer management perspective? Is technology helping you in employee management, also apart from the customer management perspective? I think Ankeet Bhat would be better qualified to answer this question because he has some solutions which can address multi-locational customer engagement. Ankit Bhat, would you like to take this question?
Yeah, I can take that question. So I think one of the most interesting ones is when this technology moved to employee management, and a very large use case which we saw at one of the largest private banks was they are essentially doing attendance through location. So if someone, and that too remote attendance and also attendance at specific large offices. Now there are many obviously location related issues like what location the device gives and all, but those are all technical complexities which I'll not go into. But the fact is that using that whole similar system platform and for attendance. So if someone is at a branch and they have marked their attendance on the phone, there are technologies which can know that they are definitely at the branch at the location, and therefore they've marked their attendance. So that is one form of, I would say, employee management that has come in. I would say attendance is one. Second, I would say from where do you have like a large office and where do you have a technology office or where do you shift your office to, you can do that by basically mapping all your employees, seeing how far they travel. And if you have a policy that, okay, no one should be half an hour away from office, where should that location be? Right? Those are questions that you can answer spatially. And we've already seen a lot of companies in the banking domain that are, maybe shifting their location of office basis these parameters, that where do their employees live. So that's also a very large use case, and attendance monitoring was another very large one. So those are interesting employee management. And if Balaji sir wants to add some more depth onto that.
Yes, Balaji.
Yeah, thank you. See, for employee management, I can say. Yeah, thank you. I think the employee management, what we can do is we have done this and we are using it very extensively for the past 3+ years. So as you rightly told, for me, almost 95% of employees, they don't have office. All are in field force, correct? So only 5%, 10% come to the office, they have office. Our branch staff could be 2-3 staff, or in a corporate, like under 200 members could be there. But whereas my entire force are all field force. So how do you manage them? This is a very, very interesting question. So what we done, as Ankit told, like providing attendance is one solution in the mobile app, but we have gone ahead and told you need to come to one certain specific location. For example, my sales team need to come to my dealer location. So what I do is I have taken all my 4,000 dealers which I'm dealing with, and I plotted the dealer. I know my dealers left and long, and I told to my sales team, only if you come to the location you can put the attendance. So what I did is I've done a geo fencing. Okay, they need to exactly visit the location. Then only his mobile app itself will allow him to put the attendance. Second point, what I done is we have not only done the attendance, but we have taken it to my mobile app also. Suppose any customer is coming, I am using my mobile app for my onboarding activity. So my mobile app itself for onboarding work if the guy is there in the respective location. So my entire application will work only if the guy in the respective location. That's it. That means like whenever you go to our office, then only certain things will work. No, similar thing. My entire application will work only if the guy is in the respective location. One is attendance, we have controlled it. Second is my application, we have controlled it. Same thing, what we have done is we have done a beautiful war room dashboard of the HO. So HO, we have just put a big TVs where I'm having a 13-member war room team. From here, I can able to see my executives where they are there. So the TV will be running 1,800 employees where they are there right now. What activity they're doing, how many people are in the collection, how many is in the sale, what kind of sales collection is there, how they're traveling, how much distance each one is traveled. So everything is getting calculated and shown on the dashboard. If I see any guys are there at one particular location for half an hour, one system gets escalated, so I can talk to them from a war room dashboard. I can able to call them directly the employee. So what we have done is we have removed multiple layers of management, and from war room we control directly all 1,800 employees where they are right now. I talk to them, figure it out what they are doing it. So this kind of a management tool we have built it in-house. Okay, so I think it's all ideation. So we need to keep ideating what kind of actionables you guys want to do, how you want to control the team. Okay, this they really enjoy it. So because they are also being protective in this, so we completely know what these guys are doing. Second thing is every morning, if I open the app, be it a sales or a culture, I need to put the beat plan. Then only I can able to use the app itself. That means what I'm going to do, sales, what I'm going to do today, every single day. Collection, what I'm going to do every single day. I need to select it. Suppose I want to go for a cash collection example, because there are 40% cash collection customers. I want to go for cash. Suppose I'm selecting customer. Morning, if I use the app at 7 a.m., for example, I need to select, suppose today I'm going to 5 customers. I'll select the 5. Immediately the message will go to the customer stating, this guy is going to come to us for cash collection. So every day morning there's a beat plan, there's a geo fencing is available. Against the beat plan, every day I know what has happened. My war room dashboard will display what is a productive, unproductive employee, everything. So these are the ideation stage. You guys need to keep ideating for the scenarios what they need to do. Thank you.
Yeah, you are right. In fact, this is also a very fundamental objective of this panel discussion, to learn from each other. You mentioned about a daily ideation and a constant ideation taking place in your organization. And I'm sure that the viewers which are hooked onto this program, they are going to learn the best practices from not only from your organization, but rest of the organizations of the other fellow co-panelists. So would you like to comment on this, Mr. Dominic, on this question of role of technology in employee management? A quick comment from you, because we are running short of time now.
Yeah. I just wanted to make one small comment. Like, when we brought in this core system, the core system app, which is an app-based solution what we have customer. Initially, when we decided that that the visit module on this particular system is integrated with my HRMS, basically my attendance management system. And as I agree with Balaji that geofencing we are done to certain corporate team, but when it's a sales team, it is not being done. When there is a thing given to them on the visit module, they know what are the collections they have to do or which are the customer they have to do. When they go to the customer's place, from there they punch in that in. The data is captured directly. And we do also have not a very big war room, we have a small war room where this is periodically monitored, and we are using a click-to-call solution where the agents are directly in touch with the team. So initially we planned it up, and we are still further upgrading. Now the knowledge what I got from the panelists, that will be very good for me to further enabling my system and picking it in a better way.
Thank you, Mr. Dominic Vijay. Now we are moving to the conclusion of this panel discussion. One concluding remark from Jyothiratha B. The future of NBFC by 2025. How is AI ML going to shape the future of NBFC by 2025, roughly 5 years down the line? Your views.
So according to me, NBFC sector already started moving towards this AI and ML techniques, and if you see, everyone wants to do hyper personalization and they want to do intelligent automation and all these things won't be possible with this AI and ML. Be it AI based on rule based or AI based on ML, whatever may be the methodology. The NBFCs are slowly deciding as per their business models, and then moving towards either of these models. So I think by 25, even RPA and AI ML put together, the industry is moving slowly towards hyper automation and hyper personalization.
Thank you, Jyothiratha. Ankeet, so your views on it. The future of NBFC by 2025 through usage of AI and ML. How do you see this transformation happening?
Yeah, so I think it's all. I think the transformation is all digital. If the ecosystem has to grow, then friction has to reduce. If friction has to reduce, I guess a lot of us would want to, get something quickly at the tips of our fingers. And I think that similar behavior would go on as you even expand the base of consumers into many, many more different areas. So it is going to be a purely digital, hyper digital kind of, growth. And that will only come through, data and data that, each individual company has. But I think there has to be some mechanism of, I'm sure it's already happening, but kind of consolidating the data so that at some level, maybe at a regulator level, so that that base can increase, and the consumer has a choice to choose what he wants, right? But and we are already seeing that through credit scores, through a lot of these things already creeping up, and I think it'll become more and more democratized. But it goes to see also how social and e-commerce and all these other factors affect lending. And that has already started. If you look at countries like China, which are obviously far forward in terms of how they've evolved, social scores are becoming important for what you do in your financial behavior also. So it'll be interesting to see how they blend together in the next 5 years. And if they do, I think some are already doing it, but maybe there might be interesting partnerships between financiers and e-commerce companies or social commerce companies to enable that, that new wave. But that those are some interesting areas that things could move forward in. But in general, I think just the democratization of this information and social and e-commerce kind of creeping in, and different methods to gauge who a consumer is and what you can give to him. So I think these are things that will probably come out very soon in the next 5 years.
Thank you, Bhatji. Concluding remarks from Mr. Andy. The future of NBFCs 5 years down the line through use of these emerging technologies.
I think the future is we're seeing the future play out before us, especially with a lot of these the changes brought about by the pandemic, and we do not know how many more waves there are going to be. It's become clear that not only is digital on the way, I think phygital is going to be the move forward, especially for some of the bigger NBFCs as well, right? And once the customer has gotten used to the convenience of a digital interface, I think it's just going to keep growing more and more as different segments. And I'm just not talking about people who are comfortable using smartphones and computers, but even across the various socioeconomic classes, they actually now demand. If you see the number of people just using UPI and payments has gone up, there's no reason why they would say that, hey, I need to go to a bank or an NBFC and stand in line for an hour to get my request fulfilled. So the organizations that adopt digital and phygital to expand will be the ones that will actually capture a lot of the market share over the next 5 years.
Quite well said. These are truly exciting times, not only for organizations. At the end of the day, the winner will be the consumer, because the technology will only going to ease the customer's expectations and also the fulfillment of his expectations. Concluding remarks from you, Mr. T.K. Balaji. Future of NBFCs down the line with the use of these technologies.
Everybody has a very valid input. My input would be, because that's a three different. One is a banking layer is there, another is the NBFC layer is there, another is the fintech layer. The fintech layer is the one who is more of a technology solution and keep attaching it to bank and NBFC. But where I do come from is everybody will start adapting all these technologies in the near future, certainly, because if they need to be in the market, 100%, whatever we have discussed it today, every single bank or every single NBFC need to adapt it to be in the market. But more than that, it is all based on customer experience, unified customer experience who can able to keep completing the digital platform, because customers' attention span is in few seconds. It's a social media world. It's a few seconds attention span. Anybody can able to service a customer within that few seconds. The customer experience. He has the share. Otherwise, I do see a lot of challenges in this area. If you can't able to address this in the next 5 years' time, challenges are there.
Challenges are there, and that's why technologies are also there, which hopefully would be able to meet these challenges. Concluding remarks from Mr. Dominic Vijay.
So, Mishra, I break it up in two ways. AI, ML will play a major role, especially for a housing finance company like that. That will become a major tool for us to for dispersing the loan. And RPA is going to be replace my complete customer service. I mean, to be very frank, that's going to be the major tool for us from the customer-centric point, keeping in mind next 5 years down the lane. And I think by the time we would have collected quite a lot of data, and AI and ML will also be the major tool for us. So three components which will help the business to drive. Without this, I don't see a further anything after that. So manual intention will be taking the back seat in this.
Thank you, Mr. Dominic Vijay. I'm still left with 1 minute before my colleague comes in and concludes the session. One last question for Mr. Ankeet Bhat of Mapmyindia. Is the industry in India really matured enough to adopt to all these solutions, so particularly the space of geospatial, which you mentioned?
So yes, there is maturity definitely, but I think the added things that vendors like us are doing is that we are adding a lot more resources to to build into their systems, because systems are pretty complex and everyone has unique systems, and therefore kind of building with with those systems becomes interesting and becomes more and more solves the use case, I would say, for ease of use. But yes, there is I would say there is insane amount of maturity and drive to adopt these technologies. So there's no question about that. Yeah, but goes to see how much more value can be extracted, and that I think will be a tough one. But I think that we continue to evolve as businesses. So.
Yeah, we do look forward to that thing seeing light of the day. With this, I'm totally out of time now. We had a very fruitful discussion here, and that was also one of the basic objectives of this conference, to create a platform wherein we invite experts from different areas of the banking and finance to come on the common platform and discuss their ideas and innovations which they themselves are implementing, and also they are seeing in the rest of the world, and they can emulate from there. We discussed the role of technology in the banking and finance scape, particularly in the context of the COVID and the way forward from here. And one thing is common among all the panelists here, that they have all put the customer requirement at the center, and whatever strategies or whatever way they have deployed the technology, they have done so keeping the customer at the forefront. And this is also equally true that companies which are not able to digitize or which are not able to scale up their digital adoption may not survive in the long run. That is the fact of the matter. So with this, I thank you once again, all the fellow panelists here. We had Mr. Jyothiratha, Madam Jyothiratha B, Chief Technology Officer at Godrej Finance, Housing Finance. I was joined by Balaji TK, Chief Information Officer, Orange Retail Finance, Andy Sain, Chief Technology Officer from mPokket, Dominic Vijay Kumar, Vice President and Chief Technology Officer, Art Housing Finance India Limited, and Ankeet Bhat, Chief Strategy Officer of Mapmyindia. So with this, now I hand over the deliberations to Mr. Aman Kothari, my colleague.
Thank you, Mr. KC Mishra, for moderating a very wonderful and insightful panel discussion. And thank you once again to all our panelists for having a very knowledgeable and insightful discussion on changing the game using AI, ML, and IoT in NBFCs. We would now like to provide all our panelists with a small token of our appreciation, starting with Ms. Jyothiratha B, Chief Technology Officer, Godrej Housing Finance. Thank you, ma'am.
Thank you.
Mr. Balaji TK, Chief Information Officer, Orange Retail Finance Limited. Thank you, sir. Mr. Andy Sain, Chief Technology Officer, mPokket. Thank you, sir.
So much, and thank you for having me on.
Mr. Dominic Kumar, Vice President and Chief Technology Officer, Art Housing Finance India Limited. Thank you, sir.
Thank you so much.
And Mr. Ankeet Bhat, Chief Strategy Officer, Mapmyindia. Thank you. Thank you to all our panelists once again.
Thank you so much.
Very much. Thank you, Mishra ji. Thank you, my co-panelist. Thank you.
Thanks, everyone.
Thank you.
Thank you, all of you. Thank you once again on behalf of Elets Technomedia. And with this, we conclude this panel discussion. But just to remind the viewers that the panel might be over, but the conference is still on, and there are more panel discussions during the course of the day. With this, thank you once again, all of you. Bye-bye.
Thank you.
Thank you. Thank you.